Alright, so I promised you guys 2 bonuses. One is how to increase your credit score by 100 points all on your own. So that means you do not have to pay a credit repair person. Even if you have negative items on your credit report, this is still going to increase your credit score by 100 points. How do I know? Because I actually tried it myself. Someone told me about it and I wanted to check it out and see if it's real, if it really works. I did it and it really... Welcome back to my channel. My name is Christine, also known as Christine the Closer. I made a video about the home buying process. And in the video, I talked about how it's important to speak to a lender first. In this video, I want to talk about how and when to know you are ready to speak to a lender. When buying a home, the goal is to first get pre-approved and you want to speak to a lender. So I'm going to go over 3 important things that you need to know. If you check off all 3 of these things, then you are ready to speak to a lender. And if you don't, then you know what steps to take to make sure you are ready to speak to a lender. So that's what we're going to talk about. Also, I have 2 bonuses at the end of the video. The 2 bonuses is 1, how to improve your credit by 100 points on your own without spending hundreds of dollars with a credit repair person. And the second bonus is how to get down payment assistance. So you really don't want to miss those 2 bonuses, which I'm going to talk about at the end of the video. So make sure you continue to watch. So let's get started. The number 1 thing you want to make sure is right before you speak to a lender is your credit. You want to make sure your credit is good, or at least meets the minimum requirement. Your credit score should be at least a 620. That's like good. Now, there are some loans who will accept a 600 credit, that's the FHA loan, or sometimes even as low as a 580. Again, those are only certain loans and certain lenders. So you want to make sure that you are speaking to the right lender as well that might meet your credit criteria. But for the best results and for the best interest rate, the higher your credit score, the better interest rate you're going to get, which ultimately leads to you saving money on your monthly mortgage. So 0.25%, 0.5% really makes a big difference in your monthly payments, like $50, $100, sometimes $200. So you really want to make sure your credit is good. However, there are some rules and exceptions for those who might have a 600 credit score or like even a 580. I believe 580, 550 is really going to be that super low point. But when you're that low with the credit, that means they're going to hike up your interest rate because you're more of a risk. So you really want to just work on improving your credit. It might actually work out better for you to do that, because then let's say, for example, maybe you have to wait 30 days for your score to go up a few points or 50 points. It's better to wait those 30 days than to end up spending like an extra $100 a month on your mortgage. So definitely work on getting your credit. Also, even if you do have good credit, let's say you have 700, 720, 750, 790, actually 790 is really good. You probably don't have to do anything. But if you are in that 700 club, you can still work on improving your credit, because the lenders have this range of credit score where it's like, okay, from 700 to 720, they're going to get this range, maybe like 3% to 3.5%. And if you have a 730 to 760, then you're going to get maybe like 2.5 points to 3%, right? So if you're at a 720, you're not at that 730 where you can get a lower rate, you might want to do something to improve your credit by just 10 points. So even people with good credit, when speaking to a lender, they will help you figure out like maybe what you can do to improve your credit by just a few points. Number 2, the second thing you want to do to make sure you're ready to speak to a lender is have some money in reserve. What that means is you have maybe a few $1,000s in your checking account or a savings account, that's money you don't touch. You don't spend it, you don't pay bills with it. That's why they say cash in reserve. So if you hear a lender say that, they are looking to see if you have cushion, basically. They want to make sure once we get to the closing table that you have the funds to get to closing. So what's the amount that you should have? You might be wondering. A good amount, I always tell my clients, is $5,000 to $10,000. Now that might be a lot for some people. So if you don't have $5,000 to $10,000, then I would recommend at least $2,000, $3,000 is better. The more the better, really. So the reason why I say at least $2,000 is because even if you have like seller's assist, which I'll talk about soon, but even if you have seller's assist or some down payment assistance or closing cost assistance, you're still going to need your own money to help with the purchase of your home. So why are you going to need your own money? Well, that's because you are going to pay for the home inspection and the appraisal, as well as when you find a home and you make an offer, your offer needs to come with a earnest money deposit, or you might even hear good faith deposit. So if you're getting like some program assistance, they're not going to give you the money until you're at closing, but those funds you need up front. So if you're wondering what is seller's assist, seller's assist is when the seller will take a portion of their proceeds and help with your closing costs. Now, what are closing costs? Closing costs are the fees you pay for the purchase of your home. So that's title fees, lender fees, and whatever else. In certain states, there might be additional fees, like sometimes there's lawyer fees. But in Pennsylvania, we do not have to use a lawyer. Spend wisely. If you feel like it's going to be hard to get to that $2,000, $3,000, then all you really have to do is, or I don't want to say all you have to do, but really focus on how to budget, spend less, and get to that $2,000, $3,000, or even invest in the stock market. I invest in the stock market, and it really is helpful to make that extra money, or even have like another savings account, because in your regular savings account, like, you're not getting 10, 20%, even 80%. Like, people are getting hundreds of percentage back on their money in the stock market. So that's another way to save money or to help your money grow. You can even speak to your lender or your realtor to discuss options on how to save money so you can get to that $2,000, $3,000, and even better, $5,000 to $10,000. The third thing, it is a 2-year work history. So they want to see long-term work history. Now, if you're thinking, oh, I switched jobs this year, and I know with 2020, like, a lot of people lost their job. Don't think this doesn't include you. If you got a new job, or you will have a new job, as long as it's in the same line of work, they will count that as a 2-year work history. Still speak to a lender to see what your options are. The lender is going to ask for W-2s and 2-year tax returns. 2 years prior to you applying for the loan, they're going to want to see tax returns. So if you didn't file your taxes before you speak to a lender, you want to make sure you do that. Now, I know for our generation, a lot of people are entrepreneurs. So if you're thinking like, I don't have a W-2, I don't have a tax return, I have good and bad news for you. So I'll start with the bad news first. Bad news is you would not qualify for a conforming loan, meaning like a conventional loan or FHA loan. Unfortunately, these conforming loans, they are really for people who are employed or have an employer. Now, you actually can apply. I'm not saying that you can't, but the likelihood of you qualifying is very slim, because as an entrepreneur, your income tends to fluctuate a lot. You might have one good year and another bad year. And for them to see that 2-year work history, they don't like to see that drastic difference. The other thing about entrepreneurship is that we have a lot of tax write-offs. Yeah, I'm in the same boat. When you're self-employed, you are trying to save on taxes. So you are getting like tax cuts and you're writing off almost everything, which ends up showing that you made less money than what you really made. And that's because you don't want to pay Uncle Sam a lot of money, which I understand. So that's the other thing that's hard about applying for a loan when you're self-employed or an entrepreneur. But the good news is that there are non-conforming loans available to you. Some examples of a non-conforming loan is like a no-doc loan or private loans, or even hard money loans. Okay, so let's recap. How do you know when you're ready to speak to a lender? So one, make sure your credit is good. You want at least a 620 or better. If you are struggling to get to that 620, then 600 is okay. There's certain loans for you like the FHA or different loan programs depending on the lender. Two, have some money in reserves. That means this is money you are not spending, you are not paying your bills with. You want to have at least $2,000 to $5,000. The more, the better. Third thing, you want to be able to prove you have a 2-year work history. And it's okay if you change jobs, then you want to make sure that it's along the same line of work. Now, if you actually did change your career, like I have done that before, you will have to wait until you have a 2-year work history. An example of changing careers, for my case, I used to be in IT, so I was an IT analyst, and now obviously I'm a realtor. So those are two different industries. All right, so I promised you guys 2 bonuses. One is how to increase your credit score by 100 points all on your own. So that means you do not have to pay a credit repair person. Even if you have negative items on your credit report, this is still going to increase your credit score by 100 points. How do I know? Because I actually tried it myself. Someone told me about it and I wanted to check it out and see if it's real, if it really works. I did it and it really worked. My score increased by 100 points. So even if you have good credit and maybe you want to increase it by a few points, this is another method to increase your credit score. There's a company called Self Lenders and they have an app on your smartphone. So it's super easy to sign up. If you have an iPhone, go in the App Store, search Self Builder Credit. Here's an image of what that app looks like. So with Self Credit, you open up a savings account basically, and the money that you put in is going to be put into a CD. You can make as little as $25 a month, each monthly payment. When you make these payments and you make them on time, they will report it to the 3 credit bureaus. I feel like I always say that wrong. They will report it to the 3 credit bureaus. If I said that right. Anyway, you know what I'm talking about. You will make these payments for 12 months or 24 months. You can actually choose how long you want to do it. As you're making these payments, your credit score will increase a few points. Now have some patience because you might not see a change the first month or the second month, but at least after the 3rd and for sure within 6 months, you'll start to see your credit score improve. And right now I'm towards the end of the 12 months that I signed up for, and my score shot up. Really good to see that history on your credit report. The other great thing about Self is that you can sign up for a secure credit line, which is another thing that's going to help you improve your credit. Just to make sure you guys know that I am not BSing, I'm being super honest, I pulled out my Self card. See that? So I really have the card. This is the secure credit card. I'm not lying, so I really have the Self app. I used it, it increased my score. See, that's my name. I'm going to include a link. That's a referral link, so I believe you will get like $10 or something. Like, you get something back. I'll leave the details in the description, but I'm gonna leave a link for you to sign up for Self to build your credit and get that 100 points that you need for free. You don't have to pay a credit repair person. Second bonus, down payment assistance. So depending on what lender you choose, and I highly recommend to not go with just any lender. Like, choose your lender wisely. I recommend you going with a lender that your realtor recommended, and that's because we work with lenders like all the time. So we know who's good, who's not, and you really want to heed to the lender that your realtor recommend. And I would say that credit unions are good lenders as well. So if you have a credit union, speak to them if you really trust them. But I'm going to say the big banks, we don't like them. And you're not going to like them either because they can screw up your deal. I want to use companies that focus solely on mortgages. And usually with those lenders, you're only speaking to 1 to 2 people. So the process is a lot more streamlined. Okay, back to down payment assistance. I got kind of like off tangent there, but that was really important information. So with down payment assistance, you can get like $3,000, $6,000. I've even seen $10,000. You know, there's all different programs. Some might require you to take classes. Some might require you to have a high credit score like 660. Some might require you to purchase a home in a certain neighborhood. And usually these are neighborhoods that are like growing, and they want to encourage buyers to look in those neighborhoods. Not redlining, although that could be a very fine line to cross. Down payment assistance is really going to be depending on the individual. It's not for everyone. Now is a good time to look for those down payment assistant programs and closing cost assistant programs because they renew those grants. You really want to get a grant and make sure it's not a loan, but if it is a loan with very low interest to no interest. So if you want to learn more about that, reach out to me. That is all. I hope you learned something new. I really enjoy making these videos. My goal is to keep you informed because the real estate industry is constantly changing. So I know what's going on and I want to be the first one to let you know. Please like this video if you learned something new or leave a comment. Subscribe because I will have even more videos like this. Make sure to hit the bell button so you can get notified every time I upload a new video. And when you know these things, I can't get it together. I keep messing up. Light it up. And the second moment, 3, 2, 1. I feel like my lips are always dry. They are looking to see that you, excuse me, information to share. And then make sure, all right, yeah, bye. Can I help you?